Hello, veterans. Today we are talking about VA home loans. And if you're a veteran and you are confused about the VA.com, VA.org website, or you are not using your benefit, the home loan benefit, or you think that it's a hassle to work through that and get your offer accepted, this is the right place for you. And we have our awesome guests today co-hosting Realtor Nick Glinkowski and Ryan Buckholt, lender, top lender in Santa Cruz area, are here with me, really kind of breaking down the information, some of the basics, and then we have a Q&A with questions. Nick, what brought you into working with veterans in real estate?
Yeah, so Nick Linkowski. So I was born on Fort Carson in Colorado Springs. My dad was a U.S. Army Vietnam veteran. He was a combat surgeon, also 100% disabled. So spent a lot of time growing up with him around the VA. Just seeing sometimes things can be difficult. There's roadblocks that need to be removed. Definitely support all service members and want to see how I can contribute in helping them for their awesome service for all of us. So, in the short, that's, just want to help them out in real estate.
Absolutely, absolutely. Just a real wanting to help. Exactly. Ryan, tell a little bit about yourself.
Yeah, so I've been doing the mortgages for 27 years. And like Nick had said, I just want to give back, to have the freedom that we have and the safety for me and my family to live here in the United States comes at a price. And I just want to thank the people who have paid that price, meaning basically working for the government in order to make sure that we're safe and secure. And from that, they deserve the best out there as far as when it comes to taking care of their family. So I think the VA loan is the best out there, hands down right now. So I just want to help out and give back and teach people utilizing this tool and how it can be for their family.
Awesome, awesome. And my name is Maaret Forst. I'm a broker, managing broker at KW Santa Cruz here, and I'm actually an immigrant, so it's a little bit different angle, but I am a citizen, and I'm probably more patriotic than lots of the Americans that take it for granted. And I happen to be from Finland, which has close connection to importance of military. So
it's funny you say that because all of my friends who are immigrants also, they love the 4th of July. They love being a citizen of the United States now. It's super cool to see that.
Exactly. There's a reason we came here.
Yeah.
Yeah. So let's just jump right into it. I have some slides here. So what is a VA home loan? It's a loan that's backed by the U.S. Department of Veterans Affairs as a service to the veterans. And VA loans are for eligible veterans and service members and surviving spouses. That's a big portion of that as well. What are the key advantages of VA homes? Ryan, do you want to touch on this a little bit?
Yeah, exactly. So zero down payment. So there's not too many loan programs out there that are a zero down. That's where the government jumps in, is because the government insures the first 20% if something were to default on that loan, if something were to happen. So that's what allows for the no money down. So again, VA no money down is, I think, one of the best programs out there. There's no mortgage insurance on there. So actually on VA, every other program does require private mortgage insurance when you put less than 20% down. On the VA, it doesn't have the monthly mortgage insurance in there. So again, one of the best programs. It saves you money right there. And then the last one, the competitive interest rates, I'm going to say it's a little different right now. It's the best interest rate out there right now. Not only is it competitive, it's the best. I have people who will buy the property on a regular conventional loan and then flip it and refinance into a VA because the interest rate is so much better right now. So I think, again, the best rate out there.
Awesome. The difference between eligibility and entitlement, these are the words that are important parts of VA loans. And so eligibility means that you have the permission to use the benefit. And then entitlement is on how much buying power the benefit gives you. So there's lots of numbers, and you need to kind of get into the weeds if you are doing this type of loan. You need to understand all of all of the nuances of this.
And the lender does help you calculate all that out of what the entitlement is and all of that other good stuff.
Right, right. So no headache in that regards. The lender's the right person to break it down.
Yep.
The key piece of document is the certificate of eligibility, COE, and that is kind of
Otherwise also known as the DD 214. Just to give you a heads up, like that DD 214. Yep, most people know exactly what that is.
Exactly. And you can get that from the va.gov through the e-benefits portal. Is that something that the veteran has to do themselves, or can the lender help with that as well?
Nope, the both of us have access to it. Borrower has access to it, and then us as a lender definitely can pull that too.
Right. And there's different things, case by case, that you need to look at into it. But basically, the type of length of service, discharge status, and certain surviving spouse status, the different things that affect the eligibility, case by case. It's important to go into the website and get the document from there. Entitlement is on how much your loan, the VA will guarantee. So full entitlement will mean that you get that 0% down.
Most entitlements will be allowed for the 0% down. It also comes into how much that funding fee could possibly be, or not having the funding fee at all. So again, most VAs will be a 0% down loan.
Right. Other costs and fees are the funding fee, like you just mentioned, the appraisal, closing costs, and we're going to look those a little bit here.
Yep, on the funding. Oh, you have it right here. It can be financed into the loan, so not somebody doesn't have to pull it out of pocket. It can be definitely rolled in. So
exactly. There's different scenarios, and I have an example with a $1 million loan and 0% down. If for your first time user of it, it's 21,000. So it sounds like a large number, but like you said, it can be financed into the loan.
Which I would say most people do.
Yeah, that makes sense. VA appraisal is an important part of the process that you have to have that appraisal, and it's going to look for the fair market value and VA minimum property requirements, which includes the safe structure, the utilities, some of the other components of the structure, and then pest free. There's a pest inspection that has to be done, and just a note that we do recommend a home inspection separately as well, to look up everything. But appraisal is not the same as a home inspection. Closing costs, who pays what? The buyer and seller can negotiate that. And typical cost.
It was actually before, a few years ago, it was seller mandatory paid. Buyer couldn't pay for it. And so it made the loan or the offer on the property less desirable because there was more cost for the seller. So then VA changed it and recently said, okay, we'll allow anybody to pay for it, so you don't lose out on those transactions where seller has to pay more because they're accepting a VA loan.
Yeah, this is a great point for some that have already attempted a VA loan in the past and things have changed to where now they can find success and guarantees with it versus maybe their first time through.
Yeah, exactly. And a lot of listing agents, they don't do VA loans all that often when they're a listing agent or accept it. So some think that it's still a cost of the seller. So being able to educate the listing agent in regards to, hey, this doesn't always need to be a cost of the seller. This makes it a much better offer than what the old VA used to be.
Yeah, and part of my standard operating procedure is once, a VA client comes to me and say, hey, I really like this home, I'm going to call the seller. And my first question after, hey, when can we tour this home, is going to be, how familiar are you with a VA loan as of, today, right? And I start the conversation with there so I can displace all the misnomers.
Right. And I remember how it used to be. I remember us jumping through hoops and trying to figure it out and trying to create workarounds, but it's so much easier now. So step-by-step process, you already touched a little bit, Nick, on your process on it. So you want to go over the step-by-step?
Yeah, it's really easy. I think the best thing for anybody on the search is to be prepared, right? Because you don't know how long that home's going to be available. If you fall in love with it, and there's other offers that may be coming in through the open house, you want to make sure that you're prepared and that you've got your certificate of eligibility in hand. Once you have that, then we find a VA approved lender. We get in touch with Ryan. We know what your entitlement limits are, and then we go looking for homes. And then you find a home that best fits you and your family. Then I'll work with that seller. I'll bring them up to speed on the details of the VA loan process and the benefits to them as a seller. And then we'll make a strong offer.
Right. There's lots of other terms, the timelines, and like maybe different things that it's not always about just the price. Other things that are important to sellers, and a good agent always finds that out from the listing agent and ask what the seller is looking for. And there are other things that can be written in the contract. What are the timelines nowadays, Ryan, as far as the close of escrow for a VA loan?
So we're doing them as short as, I'd say, 21 days. So a 21-day closing is, we can do it pretty quickly. Most other lenders are probably going to be a 30-day close, somewhere in there. The one thing is that the appraiser, by law, appraiser has, I believe, 7 days to schedule the appraisal, and then by law has another 7 days to complete it. So 14-day-ish turnaround time on the appraisal, but everything else is usually pretty quick.
Is seller occupancy allowed if you want to make your offer really strong? One of the tools is to allow the seller to stay in the home for a little bit for free, perhaps, especially in competitive market. Is that allowed?
I believe it is up to 59 days. So that's a key point of 59 days. Anything greater than that, not allowed. Less than that or that should be fine.
Awesome. So really, like a perfect scenario, you can really come in strong, just like anybody else, just like any other offer, come in really strong with that. So that's also a plus, and that's what we want to educate the listing agent with. And then we have some questions from real people. And I'm just gonna shoot these questions here. So, can I reuse my VA loan benefit, Ryan?
Yes, you definitely can. The requirement is if you're living in the same area, you have to sell before you buy the next VA property. It can be same day close. It can be close in the morning on the old sale and then purchase the new one that same day. We can definitely transfer over that. The other rule is you can have 2 VA loans at the same time if you relocated for a job and the job is more than 150 miles away. So if you're moving more than 150 miles away, you can reuse have 2 VA loans at the same time.
All right. What about condos?
So yes, condos are eligible, but it has to be VA approved condo project already. So I do have a lookup where I can go through, look up all the condos in the area, and I can give you a list of, hey, here are the condo projects that you can look at that are already VA approved.
What are some of the criteria that's part of that?
They just have to go through a process of turning in their bylaws, turning in their budgets and balance sheets, turning in their insurance. They have to go through the process of having that whole complex approved.
Yeah, I think that's important too. When we go on the search to understand if you're looking for a condo, what is qualified before we don't waste your time looking at condos that aren't qualified, right? So that's something I would reach out to Ryan and say, hey, what is qualified today in this area? My client's looking for a condo. So that's great.
Yeah, so you don't go and see one and then you fall in love with it and then you find out like, oh.
Only leads to disappointment.
Yeah.
Disappointment.
Yeah.
All right. Sellers keep rejecting my VA loan offer. What do I do?
Okay. So a couple things on that because of the VA loan. So one, when you're going in on a contract and it says 0 down, that usually freaks a seller out that, oh, these people don't have any skin in the game. But really explaining them, no, this is the best financial move for the client is to have no money down because they get the great interest rate and then they can retain their assets for their family on a rainy day or something like that. The other misnomers that we talked about was it used to be that the seller had to pay closing costs on certain things. Again, that's no longer. So educating the listing agent and the seller that no, you don't have to pay these fees any longer is a huge win for them to understand that. Also before, a VA appraisal was much more stringent about the quality of the home or any deficiencies in the home. Nowadays, all appraisals are pretty much the same. They all kind of adhere to the same guidelines. Yes, there's a couple little different misnomers, like on a VA, they have to look into the attic, whereas on a regular conventional, they don't have to. Again, I've never seen that ever be an issue. The other biggest misnomer is that I must have a termite report and do the Section 1 repairs. In California, my dad is a general contractor. He says the wood comes from the lumber yard with already termites in it. That's just where we live, where the weather is what it is. So with that said, we actually don't have to do a termite report on the property. There's a document called an NPA 33, which is a government document that says if there's no evidence of active infestation, then the termite company can check that box, and then we don't have to actually do a termite report or clearance. That could be a huge savings for somebody of having money in their pocket, because again, I've seen termite damage, $10, $20, $30,000, where the seller didn't want to do it and buyer didn't really have the money right then, wanted to handle it on their own. So that helps out tremendously for a VA buyer, because it's like conventional now. Conventional doesn't require that. So being able to utilize that is huge. So I think really understanding the VA offer from the seller's point of view is key. Second to that, I do have some VA clients who can put down 10% down, can put 20% down. So how I'll write a pre-approval letter is, hey, we could do either conventional with 20% down, or we can go VA no money down. It's way more beneficial for my client to take the no money down VA with the better interest rate. But if that's really where you want to be because of certain reasonings that you have, then we're making the offer with the 20% down. That gets across a lot of hurdles too.
Yeah,
right.
And it starts with when I first reach out to that seller too, right? And I ask them, hey, are you aware, how well do you understand the VA loan structure? And, I'll displace a lot of those misnomers early. And then I think, Ryan, again, back to the point that, the 21 closing versus a 30, right, could be a really powerful tool for the seller as well.
Yeah.
Right? Understand that we can do that.
Right. Just having a real professional on your side is the key thing here. It is always important for any person when they're buying or selling home and having a true real estate professional. But I think to really take advantage of the VA loan is even more so important to really take advantage of it.
Yep.
Do VA loans have a prepayment penalty?
No, they don't. Basically, when the whole government debacle in 2008, 2010, where we basically melted the economy, my industry did. Basically, owner occupied, they don't have any prepayment penalties anymore. It's basically against the law to have a prepayment penalty on an owner occupied property.
Any kind of loan, right?
Non-owner. So when you buy an investment property, you can.
Okay.
But owner occupied, no. So no prepay penalty.
Good. That was a thing in the past.
Yep.
Then the question, I just learned about the VA funding fee. Should I put more money down? Because it's based on the loan amount, correct?
Exactly, correct. Me personally, that, like for example, in the document that you showed before, that $20,000 over the life of the loan represents like 68, $120, something in there. I personally wouldn't. I'd rather go the no money down, hold your nest egg in case some repairs come up. But no, you don't always have to. You can if you'd like, but you don't always have to pay it up front.
And that's thinking of the big picture. It's not, there's the transaction and getting, doing a strong offer, getting into the home, but really looking at the big picture of how are things going to look like in 5 years? How is your life and family and goals, all of that, what your end goals are in 5, 10 years, taking those into consideration with the loan and the property is really important.
Yeah, definitely.
As a young family, right? First purchase, cash flow is so important, right? I think this is the best product on the market for anybody to take advantage of if they can.
Absolutely. If I was a veteran, I would use it. All right, another question. Let's see. The VA appraiser valued my home 25,000 under the price. Now what?
Okay, so VA is one of the only loan programs that has this thing called Tidewater. What Tidewater means is, their definition is, if the value of the property is going to come under what they're purchasing it at, the appraiser has to notify buyer's agent and seller's agent and tell them, hey, appraisal's coming in low. Can you give me any other comps that's going to help bring up this value to how much the buyer's paying? If within 7 days they can't get them any other comps that really it is going to come in that low, then you get that appraisal in at that price. Then that's the buyer's time to renegotiate the contract back with the seller. So it doesn't mean that the buyer's stuck at that higher price. They can renegotiate. Seller could say no, and then seller takes it off the market, you fall out of contract, or seller could say yes, or seller could meet you in the middle. One thing about VA loans is when a VA loan is done on, appraisal is done on a property, that VA loan, if anybody else in VA comes in to buy that property, that appraisal must be used for 6 months. They can't go out and get a new appraisal. So that is actually going to stick with the property for 6 months, that undervalued appraisal.
And so it's not that different from a regular other loans. Basically, you can go back and negotiate. And so
Correct.
that's the importance. So, and that's another piece that is important to educate the listing agent, because that is one of the questions the listing agent might have is like, well, what if, what about the appraisal? It's like this big thing that is going to ruin the sale, but it can be negotiated. Doesn't mean that it's the end for that transaction. Next question is, I am disabled. Do I still pay the funding fee?
So there can be different degrees of disabled in VA, in veterans, and that can also translate to how much the funding fee would be. So 100% disabled, that you can actually have the full VA, the 100% of the VA fee, funding fee waived. Again, depends on variations of it. There's even some counties and or states that with disability, you can actually pay reduced property taxes also. So I had a client who was actually pretty severely disabled, and he actually paid no property taxes at all, which was a huge win for him.
Wow. I didn't know about that.
Yeah, huge.
So again, case by case, obviously every person's situation is different on this one, but in general, if you are disabled, the funding fees will likely be exempt. And then the $1 million question, VA loan versus conventional 20% down, which is better?
Yeah. So right now, so for me, down payment, for me, it's put as little down as on property that I can afford to still make the payment. Again, I want to keep my nest egg. I want to keep my family savings in case something were to happen. Okay. So I'm always, worst case scenario, I always want to hold as much cash as I can personally. With a VA loan, the no money down, hugely beneficial. Conventional, higher interest rate. If you go look at Mortgage News Daily today, about a 0.5 to 0.75% difference in a VA interest rate compared to regular conventional interest rate. So huge benefits right now. Like I mentioned before, I do have clients where the seller won't accept a VA, so we go out and buy it conventionally. And then, so VA has this weird, it's not a prepayment penalty, but VA says that if you got a property, you have to wait 6 months or 210 days, I think it is, from when you closed escrow to get into a refinance of a VA loan. So I'll have a client that goes out, buys conventionally at the higher interest rate just to get the property. And then 210 days later, we refinance into that VA to save them 3/4 of an interest rate, which is pretty huge, where in California, our property values are pretty expensive.
Right. All right. So yeah, and you keep saying that you would, do that because you want to leave as much money on your bank account. For most people, that is a good strategy. But some people it is very important for them to pay off the home. They value that. So
exactly.
That is another approach. And you might want to, obviously choose what is better to you. The important thing is to know all the details and look up the big picture. Like I said, look up 5 years ahead, 10 years ahead, and then know the numbers and the different scenarios, and then make your choice based on what works best for you.
Exactly. I have some people that want a certain amount of their mortgage payment to be X. And so really keeping it that for their family to budget is really important. So yep, definitely have that.
Right. And then, so just like a statement, so what we've learned from this whole webinar is the VA home loan benefit is one of the best and most underutilized tools veterans have for building wealth. And you even went as far as saying that it's not only one of the best, it is the best, right? The best loan product. You
Yep, I agree. So actually, I want to stop on this for a second for the building wealth part. So I actually do have VA clients who will go into a VA, buy the property with no money down, wait for it to appreciate 20%, refinance into a regular conventional loan, and then buy the next property, owner occupied VA, zero down, and keep doing that. And then they stack up all the properties that they own, getting into it with no money down, refinancing into conventional, and then using it again, and then using it again. So there's a definitely strategy on helping veterans build wealth in regards to utilizing this program.
So it's not only for first-time home buyers, but it's also for, savvy investors that might make use of this benefit.
Definitely. And now that VA doesn't have a loan limit. So basically there is no, back in the good old days, probably 10 years ago, it was up to 300,000 in our area, which everything back then cost 600, 700,000. So it was totally, you could not use it. Then VA started going up to about $1 million, 1.5. And then recently, a couple of years ago, they took the loan limit maxes off there. So there actually is no VA loan limit right now today in their guidelines. 2 million, I've done a $3 million VA loan. No money down.
Amazing.
Best interest rate. Yep, amazing. If I would have known this in my career, I might have went and did the military.
Right. And then you just move the entitlement. Basically, that's what's happening there when you're doing the refinance. You put your entitlement into the property and then you refinance, pull your entitlement, and you're able to do that next purchase, correct?
Exactly. Correct. The key is owner occupied. VA does require it to be owner occupied.
Right.
Yep.
Awesome. All right. And here is Nick's contact information, and a QR code to his website. Phone number. What's your phone number, Nick?
831-201-3848. Don't hesitate to reach out so I can, make your benefits work best for you with, the whole process.
Awesome. Ryan, how do people get a hold of you?
So office number 831-425-8326. It's called 425 team. That actually rings my direct cell phone number, so it'll come across to me. For somebody to get started, it's about a 10-minute conversation. I think I do a really good job at not making it overwhelming. That basically we'll just have a 10-minute conversation about what your income is, what your bills are, and are you looking to put any money down? With that information right there, I can even teach you the formulas of what lenders use in order to pre-approve you. Knowing what you can or can't do is more than half the battle. So utilizing yourself with that, and then it helps you plan for the future. Okay, maybe I can't do it right now, but here are the 3 things that I can do in order for this to actually become a reality for me. So again, we won't even do a hard pull on your credit report. It's very easy. Again, just a conversational transaction that we'll have at the very beginning to kind of go through what you can do.
Right. And not knowing is the worst thing because you might be able to use this amazing benefit. So that would be a shame, right? So the easiest way is just to have that quick conversation, go through the scenario and see how you can jump into the game on using it. And my name is Maaret Forst, and here's my QR code for my link tree. I'm a broker in Keller Williams Thrive. Over 20 years experience, where Ryan and I are in the same category of the old timers in this industry here in our area, Santa Cruz, Monterey, lots of veterans in Monterey, San Benito County, Santa Clara. Those are great. And of course, Ryan can do them all over the country. This is a federal program, so the rules are basically same in the whole country. However, then if you're purchasing in California, there are California specific items to that. And quick disclaimer before we head out is this webinar is for informational and educational purposes only. We are professionals, but you do need to get verify the information. It is not legal or tax advice. And then if you are currently working with an agent, this is not considered a solicitation for your business. If you're working with an agent, please call them. And then another note, I'm in Reddit and there's so many people asking questions about this stuff over there. And I know that people are asking AI these questions about the stuff. Do not trust those places. Don't go to Reddit. Don't go to AI. Talk to a professional. Call Nick, call Ryan, call myself, and we can help you give real answers to real people and really run it through you and make it a win. All right.
Agreed.
All right, great.
Thank you very much. Bye.
Bye.
All right, thank you.